you're here, drop us a message, say hi. And can everyone hear me loud and clear? Just let me know if y'all can hear me loud and clear in the chat box so that I can see. Yes. Hi everyone, hope you all had your dinner. Good evening, and let's wait. We will start at about 8:03 perhaps. Let's wait for more people to join in. So welcome to all of you here. Welcome to our first ever webinar. And would like to know where are most of you all tuning in from. Are you all based in KL, Penang, and where you're based? Let us know in the chat. Penang, nice. Hi Ning Yong, hi. The rest, what about you guys? Where are you guys based? Let us know in the chat. Don't be shy. I think you can just type in the message KL, PJ. Okay, nice. Okay, I think we have quite a number of you joining in. I think everyone's slowly coming in, about 20 of you all here right now. That's great. So, SS2, Sarawak, nice to meet you. So, we have a very interesting topic today, so get excited. Okay, let's 801, okay, 19, okay, let's wait for more to join. Just want to let everyone know, if there's any questions, feel free to leave it in the Q&A box section, Q&A box of Zoom. Then later our speaker Han, he will go through it and then make sure that we answer your questions. So just let us know if there's any questions, or you can feel free to type it in the webinar chat as well. So yeah, excited for all of you to be here. Okay, I think let's get started. We have about 22 of you, 24, 22. Okay, great. So okay, I think let's get started. So let's give a minute. Okay, so good evening everyone. Awesome to see everyone here. My name is Shariah and I'm from the Halogen Capital team, and I'm your host for tonight. So like I mentioned, welcome to our first ever webinar. I hope you guys are as excited as I am. And for our first ever webinar, we have a very interesting topic to kick things off. I think you can already see it on the screen. And we also have a very special guest. But yeah, before I introduce him, I would like to understand most of you a little better first. So my question is, how much do all of you know about crypto? Can you all share with me? Are you all maybe complete beginners? Or maybe you think you know a little bit, but you like to know more so that you can potentially invest in it? Or you consider yourself like a very seasoned investor and you're just here to keep yourself updated with the scene and things like that? Okay, Stefan, eager to learn more. Beginner, very familiar, already a user. Oh, 4 years in the industry. Okay, so seems like most of us here, not a beginner. Okay, so seems like most of us here are okay. We know a little bit about crypto and potentially like to know more. Intermediate. Okay, great. So good to know. Okay. So for today's topic, as you can see on the screen, we are going to be talking about the rise of crypto in the investment landscape and how we as Halogen Capital play a role in this space. And we couldn't have a better guest than our founder and CEO Han here with us today. So our founder and CEO Hann Liew is here with us today to share with us more about that. So let me introduce. Maybe Han, you want to turn on your camera and say hi? So, but maybe let me introduce him a little bit first before I pass the screen to him. So everyone, meet Han. So Han is actually a fund manager and also a fintech entrepreneur, and you might know him. You might heard of him previously from his previous business venture, Ringgit Plus, which is Malaysia's top financial product comparison service provider. So that aside, he's also a certified financial planner and has helped thousands of Malaysians grow their wealth through traditional and digital assets. And he's here to be sharing with us about cryptocurrency as an investment asset class. So Han, do you want to say hi to everyone?
Hello, evening everyone.
Yeah. So okay, that's for him, all of you. So all right, Han, I'll pass the time to you. And to those of you tuning in, just leave us your questions, be it in the Q&A section or in the chat box, and we'll get back to it later. So okay, over to you, Han.
Thanks, Jaying. Good evening everyone. Hope everyone can hear me. Quick mic test before I get started. If you can hear me fine, just give me a thumbs up. Either use the emoji, give me a thumbs up on the chat. Or give a hands up. Also to see if everyone is awake. It's after 8, I guess. So hopefully some of you had your dinner already, or if you haven't, hopefully you'll have one not too late. We try not to do too long, I guess, Jiaying. Cool. Looks like everyone can hear me. Cool. Thanks. I see all the thumbs ups. If it's not clear, just at any point, maybe my internet's gone wrong or somewhere, just ping in the chat saying, hey, Han or Jiaying, I can't hear him or whatever. Just let me know. And happy to like try and figure out a solution, either some audio issues or whatever. We'll try and figure it out. No worries. Right, we'll try and keep it a bit interactive, not just me talking. So feel free to give me a thumbs up anytime or thumbs down if you don't like what I'm saying. Also can. Thanks Jay for that kind introduction. A little bit more about me. Do follow me on X or X Twitter, whatever you want to call it. But yes, I mean I've done many webinars in the past. As Jay mentioned, I've trained many investors previously as a financial planner, investment advisor. I've trained many investors on digital assets, how to view them, how to treat them within your overall portfolio. So this is a topic which is very, very dear to me and close to me. I've had many years in financial markets. Most of you will know me from my previous life in consumer banking and consumer fintech at Ringgit Plus. But many people don't actually know that I'm trained in actually investment products, derivatives, and funds. So that's something that is something that I know for a very long time, right? So investment advisor, trainer, whatever you call me. Hopefully, we can do an interesting session today. A little bit on the company. We are new. This is the first ever webinar, as Jai mentioned. Halogen is a new fund manager in Malaysia. We are the first CMS licensed fund manager in Malaysia who can offer traditional but also digital asset exposure. In Malaysia, digital asset is a catch-all term, comprising, yes, split up into two things, digital currency and digital tokens. Both are slightly different, they mean different things, but the catch-all term is digital assets. We are very proud to be the first. We hope there will be more. And we hope to pave the way for more players in this space, right? Because the more adoption, the better for everyone. So that's a bit on Halogen Capital. The minute I say that though, I say, hey, look, we're in digital assets, then people ask, what's that actually? Crypto. Oh, okay. So how's that different from the existing crypto players that I'm aware of today? Be it, I've heard a name Luno, I've heard an exchange. Where do you guys sit? Very, very simply, this is where we sit, right? This is a box. On one side, you'll see where you can trade, where you can buy, sell, securities. Like, so in traditional world, you buy through brokers, right? Like Rakuten Trade, CGS, M Plus Online, etc. And on the digital world, digital asset world, you will do it on Luno. You might know Synergy, Tokenize, MX Global, etc. There's also a one or two new ones coming. We sit very much on the buy side of things, right? So when I say buy side, that should strike a few people's mind and say, hey, look, I do understand what that means. When you say asset management, I've heard of what asset manager does, right? So you have heard some familiar names such as AHAM, Principal, Public Mutual, Kananga, etc. So we sit very much on that side. We're very much a fund manager. It's just that we specialize. We can do both traditional and digital assets, but we specialize in digital assets. So hopefully that gives people a sense of, okay, I understand now, because there are places to trade and there are places to invest. And we very much sit as a place to invest. So today's session is really around, let me go back to me go back to the start, right? Today's session is really about this topic, which is crypto as an investment asset class. Now, I won't say this is an absolute beginner webinar. I'm not going to go through specifically what is crypto, the history of crypto. Too much. I'm not going to go too much about that. I'm going to focus a little on crypto as an investment class. Now, if you really need to know exactly what crypto is, happy to take that in a question later. But I'm going to assume that most people have a general sense of what it is. Heard a lot of things about it in terms of probably in the news around crypto price behaviors, things, i.e. going up and down, or crypto counterparties, i.e. things doing really well or going bust. Hopefully you have some sort of minimum general knowledge, and I got it earlier from Jiaying's Q&A with you guys, that yes, most of you have some knowledge of what crypto is. And my job today, my topic today is really to enhance your understanding of crypto as an investment asset class. And I'll explain what that is in a minute. First off, is crypto legal? Classic question, I get a lot. First thing to mention there is that on the legality side, like crypto has regulatory clarity in Malaysia, right? The SE, our securities regulator, the people who regulate investing in Malaysia and in investments and capital markets, have a prescription order, right? An order, I call it, I guess, and recognizing crypto or digital assets in this sense as securities. So digital tokens and digital currencies as securities, as per the Capital Markets Act. So similar to stocks and bonds, treat it like that, essentially. The SAC is called, it stands for Shariah Advisory Council, right? Within the SE, there is a Shariah Council to do pronouncements and resolutions, all things Shariah related. They've also resolved in 2020 that the trading and investment in digital assets that are done locally, right, on local exchanges, registered with the SE, are permissible from a Shariah context. So that should give everybody who cares about Shariah compliance confidence that that is the case. And then finally, I guess, but no means least, Bank Negara, a central bank, in a joint response with the SE in 2020, and they have made many statements in the past, but very, very specifically in a joint response in 2020 with the SE, outright declared or stated, while digital assets are not legal tender, means you cannot force someone to accept it as payment for goods and services. They have multiple use cases, including as an investable class of assets. So that should trigger a few things with today's webinar title, right? So crypto is considered in Malaysia, at least legally, securities investable class of assets. I know I said I wouldn't go through a little on crypto, but just one slide on what crypto is, right? It's in the last 15 years, it's become a phenomenal industry, like not just an asset class to be invested in, right? With extremely high market capitalization. Mind you, these slides were done 3 days ago. The things have changed in the last few days. But yeah, I mean, it's a rapidly growing industry. Over 10,000, 12,000 crypto assets in existence across tokens, currencies, assets, etc. It's here to stay, right? In some shape or form, in many shapes or forms. We cannot ignore it, right? And this session specifically, I want to focus on crypto, not the use cases of crypto specifically right now, or the technicalities and the technical aspects of crypto, right? I want to speak to everybody here and hopefully give everyone a bit of sharing on crypto as an investment asset class. And what do I mean by that, right? I mean, to be investable, right, you need to have generally two lenses, right? When you're considering an investment, right? You've got to consider value is a big word here, but the utility value, like some people call it fundamental value, some people call it utility value, some people just call it value, which is what is the value of crypto as asset class? What does it do? Why is it valuable, right? What can I use it for? All these kind of things, right? And then second is how does it behave, or what is the value of crypto when seen in the investment lens? As an investment, what are the characteristics I need to look out for, right? So that's pretty much the bulk of my chat today. And hopefully we get some good questions later. But I'll go through each specific kind of these two separate things in its specificity, right? Specifically those two things. So first, like what is the fundamental or utility value or the use case, whatever you call it? Number one, it's frequently used as instant transfer settlement network. Sounds very, very technical and complicated. Don't worry, I'll explain what that is. Number two, it's sort of an insurance policy. I very carefully use that word. It's sort of an insurance policy or buying a bit of insurance, not from things like dying or a medical plan and stuff like that, but insurance from monetary debasement. And again, sounds a bit technical, but I'll explain what that is later. And third, crypto is starting to be seen utility-wise as a non-sovereign store of value. Again, these sound very, very complicated to some of you, but don't worry, I'll explain exactly what these things mean. And then we will consider crypto as an investment class from an investment perspective, right? What does it mean to look at it from an investment space? Some people call it technical analysis. Some people call it some people call this technical analysis. Some people just call it, price action analysis, whatever you call it. But when you're looking at investment, you have to understand these things, right? So things like supply and demand, things like market cycles, and what does it mean? What are the price characteristics? Like, is it a low return, high return type of asset? Is it a low risk, high risk kind of asset? So, and most people know, and it is in fact the case that crypto as an asset class, and Bitcoin in particular specifically, is a high return, high volatility asset. Okay, cool. I've got a question from Ronnie here around a quote from a famous investor, Charlie Munger. I will answer this in the next 3 slides because I'm going to explain why things have value or why things don't have value, right? I mean, just a preamble, right? Charlie Munger's quote is, "Cryptocurrency is crazy, stupid gambling. People who oppose my position are idiots." What are your views on such a statement? What I'll say is Berkshire Hathaway's largest positions, or actually one of the biggest key kind of cornerstones of Berkshire Hathaway's business, is in the insurance business, right? So they actually underwrite insurance, and insurance should be very well understood by this guy. And once I explain point 2 here, right, hopefully that shines a light, and you can form your own opinion on this position. Cool. Consider answer live, but maybe I'll type it later as well. Okay, so first off, let's talk about utility value of crypto, right? When people say, "Hey, look, Han, what is the fundamental value," right? Let's think about what crypto does, right? What people use it for right now, right? One of the use cases of crypto is that it's used as an instant or near instant, right, within seconds or minutes, settlement network. And what that means is a settlement network is something like ability to settle value from one person to another person, or one counterparty to another counterparty, right? So it's a means of transmitting value, right? You can think of things like, okay, what else transmits value? Okay, if I'm thinking short distances, it's things like maybe my bank. So I have one bank branch here and one bank branch there. There's a HQ connecting the two, right? I send money from here to Penang, and then there's a branch in Penang who's connected to a branch in KL. This is really banking at its kind of base layer, right? Which is, okay, I'll put money here, and then someone else can take money out there, right? Whether it's electronic or physical, doesn't matter. But that's me transferring value, right? Or I can think longer distance, right? Like maybe I need to pay someone overseas very far away, and we can think of already networks that behave like this, right? Or enable this. Networks such as Visa, MasterCard, etc. And I can tell you that Visa, MasterCard, etc., they are networks which have tremendous value. You can check the market cap of Visa, MasterCard, Amex, etc. It's in the hundreds of billions of US dollars, right? So you can immediately see, okay, why do these companies have value, right? They have value because they provide a service, which is to transfer value from one person or one counterparty to another. And frequently people use crypto for similar things, right? And the value of a network is and most of us know this by now, most investors here know this by now, right, is in the size of the network and the frequency of use and adoption, right? So I use this word adoption very, very sparingly. But for me, what I'm seeing is tremendous increase in adoption of crypto, which you can start to see analogs of, and a very uncanny parallel to the use of the internet in the 90s, right? I can remember in the early 2000s when I talked to people about the internet businesses. I have been a fintech entrepreneur for the last 12 years or so, but I do remember talking to many investors about internet businesses in the early 2000s. Many of them say, oh, well, after the tech bubble crash, no, these companies have no value lah. Facebook, there's no value to Facebook. It's just you go and chat only, right? But we all know, like, internet-based technologies and companies are the dominant sectors in global economy today because we are a highly digitalized economy. In fact, we're doing a webinar on Zoom right now, right? So there is economic value in these kind of activities on networks, right? In this case, settlement networks is financial activities on networks. And today, like internet-based companies are the dominant sector in the global economy. And despite things like the dot-com boom, financial crisis, etc., right? Early investors of internet sectors, right? You don't buy a specific person. You can just buy several large internet players and watch that grow, right? And the earlier you are, the more you made, yes, but the more risk you took. But tremendous returns over the last 25 years. And what we're seeing is literally the crypto being adopted at similar pace to what the internet was doing in the late 90s, right? So that gives you a sense of where crypto is. And the opportunities for early investors to come in and choose the right or choose a basket of the right investments here. So utility driven by settlement value network adoption. Okay, and for me, how do I prove this, right? People are starting to see this already. I don't have to prove it because, like, how do I prove that you can transfer value better than another counterparty? Most people use banks and banking networks and payment networks like Visa, MasterCard to transfer money, to store money. I think most of us don't have to look too far to see where the a recent crisis occurred, right? Like when there was a loss of confidence in the banking system, or at least a regional banking system in America, in Europe, in March, right? Where tremendous fears around banking, trust in banking system, trust in ability to store money, trust in ability to transfer money. These are fundamental things that something like Bitcoin does. For me, the market started to react to that, right? And Bitcoin is starting to exhibit properties as an alternative to such systems, right? And we're starting to see it already, right? And it's starting to be even more and more so. And why this is the case versus like 5-10 years ago is that the adoption rates of crypto are starting to impact the broader financial market, right? And impact broader financial services. So hopefully that everyone understands what I mean by settlement network and exponential adoption of that network, and why that is fundamental value, right? Again, why would you value Visa, MasterCard? They are service providers. What do they actually do? They're middlemen between us and the banking system. They smoothen out transactions, right? So similarly, like digital asset networks or blockchains or in this case Bitcoin can perform that service, which means it has value, right? If I just define it that way. And hopefully as an investor, you don't just go, oh, I can't see the value. I'm showing you the value right now. How much to value it? That is the question. I leave to you. Today is a bit short for me to go through exact things like valuation. Hopefully that answers the question. Maybe later I'll go through some of the questions as well. Second, utility value that people are starting to realize and use Bitcoin and certain other cryptos for is here I call it safeguard, but earlier I called it insurance policy, right? It's really not rocket science, and a lot of us here, and I think I'm looking up and down the list, a lot of us here are sitting in Malaysia. We know what's going on, or rather we feel it closer we feel this sense closer than a developed market person would, right? Because monetary debasement means, right, when a governmental or a central banking entity increases the money supply above what the economy can take. And that basically means each unit of money, in our case the ringgit, but I can substitute this for any other country. In our case, the ringgit is worth less every time, or as the authorities or monetary authorities start doing this, right? Like it's just debase. That's what debasement means. More currency in the market, less value to your currency. When it's hard to explain this to a developed market person, but pretty much everyone in Malaysia understands what I mean, right? And having crypto, like which is certain cryptos, not all, right? I'm very limited to this Bitcoin right now, limiting this specific use case to Bitcoin right now, right? Can be seen in your portfolio as a little bit of insurance against monetary debasement, i.e., if a lot of your assets are in a specific currency or a specific couple of currencies, right? Having a scarce asset like Bitcoin, proven to be or believed to be and proven to be scarce asset can be a small insurance policy against this from happening, right? And for me, it brings us to next point around utility, which is because of that, people are starting to see cryptos like Bitcoin as a solid store of value. And for me, again, we're all sitting in emerging markets here. We're not sitting in a developed market, right? So it seems easier for me to explain this point to you, right? You can see in the past year, large countries with large currencies, Argentina, Turkey, Pakistan, right? Bitcoin is starting to become an alternative store of value versus US dollar assets, right? So these countries, they for many years, they've understood the nature of using US dollar based assets to protect their wealth, right? Alternative to that, gold, yes, and commodities, yes. But Bitcoin is starting to be seen as an alternative store of value for the various kind of feature points of Bitcoin or attributes of Bitcoin, right? Which is it's scarce, it's liquid, it can't be banned. It's decentralized. It can't be banned. When a country tries to ban Bitcoin, like for the fourth time, you've got to ask yourself what happened to the first three times it tried to ban this currency. And lastly, it's very secure. The Bitcoin network has actually never itself been hacked. Companies have been hacked, yes. Counterparties have been hacked. Smart contracts outside of Bitcoin have been hacked due to their poor construction. But Bitcoin has never stopped in more than 10 years, right? It itself has never been hacked. It itself, due to its decentralized nature of the people that are securing the network now, it's more expensive to hack the network than the rewards that you would get. So for me, for whatever reason that is, and I can, as an investor, you can believe or not believe the reason. But for me, like the thing about store of value is, do people value it? And people do. So for me, that's kind of a big important point. So I've talked about how to view Bitcoin from a fundamental. I use that term a bit lightly, but fundamental or utility value. Let's talk about Bitcoin as an investment asset, right? So as an investor, I do have a CFA charter. It's important for us to view assets as a financial asset sometimes, or analyze it similar to how we analyze financial assets. So I want to share about how I view Bitcoin as an investment asset, right? First up, extremely high risk, high return, right? What I mean by that is, periods of large upswings, periods of large drawdowns and volatility. Mind you, this is as of a couple of weeks ago, so the data obviously needs to be updated since. But nobody can deny that if I was doing price action analysis on Bitcoin, there is almost no other conclusion that I would make other than Bitcoin is extremely high risk and high return. What I mean by that, in numerical terms, high risk volatility has averaged in the 40% range in the past year. I mean, it goes up and down, obviously, but on average, 40%. Right now, it's in the high 40s. And this compares to equities at kind of teens to 20 when it gets a bit spicy, or bonds, like when it's kind of 5 to 10%, except in recent weeks, of course. But so just to give you a sense of comparison in terms of what I mean by high volatility, extremely high volatility, and with high risk of drawdowns, right? So the max drawdown from investment point to the lowest point is 80%, right? So it's extremely high risk, high return. But that's a characteristic. Second characteristic that is worth sharing, financially anyway, is the concept of correlation. forgive me if these are new concepts. I can explain correlation in the Q&A if needed. But to an investor, correlation is a very, very important thing. What I mean by that is, when you're constructing a portfolio, what you don't want is a highly correlated portfolio to each other. So you don't want assets within a portfolio which are highly correlated, which means they move in tandem with each other. When one goes up, the other goes up also. When one goes down, the other goes down also. Because what that means is you don't have enough portfolio protection for when one asset draws down, and you don't have any other assets which can move in the opposite direction, or at least don't move at all, right? So and for financial advisors or financial analysts or people with a sense of finance, they will know that having an asset with low to negative correlation with every single other asset out there is extremely, extremely useful, right? Because what that means is putting it in your portfolio helps times when those assets that are currently in your portfolio experience drawdowns. So you can see US equities, Malaysia equities, whether you look at bonds on the US side, Malaysia side, you look at the ringgit, you look at commodities like gold, oil, pretty much low to even some cases negative, right? So correlation is a number that is between -1 and 1. And high correlation at 1 means you're moving in tandem with each other. Negative correlation, -1 means you're totally moving opposite from each other. 0 means it's not really related, doesn't really move in concert with each other at all. So for me, that gives you a sense that Bitcoin is extremely lowly and sometimes negatively correlated asset to what's existing in most people's portfolios. And how does this look in real life? I'll share a LinkedIn message, a post from our co-founder Lucas today, or was it yesterday? A couple of days back. And this is what it looks like in real life, right? Like as some certain assets drop, certain assets rise. And in this case, it was, equities and bonds. So equities and bonds both dropping in the past month, and Bitcoin rising. That's what that means, right? And so that's what correlation looks like in real life, right? So as an investor, the one question that everybody should be asking themselves is, sure, I've heard of the return, I've heard of the volatility. The question you should ask yourself is, what do you do with a high return, high vol, not so correlated, uncorrelated asset, right? Most portfolio construction people, and I've been trained in traditional portfolio construction, right? We'll go back to Markowitz. Markowitz is a chap which created something called the modern portfolio theory. And the idea behind that is to find optimal portfolios, so optimal combinations of assets, which gives the highest return for the lowest risk. So let's see if I can I do this? Do I have a red line? Oh, yes, I do have a red laser. There's something in that theory called the efficient frontier, which is the point, I'll come to this blue line here, the point at which you get a very optimal portfolio. So optimal portfolios across the entire line. And these are made out of a combination of assets such as cash, bonds, real estate, equities, emerging markets, equities, commodities, right? So you can tell as you go higher up the risk curve, you should get more returns. And you do, right? Cash, low risk, low return. Emerging markets, commodities, higher risk, high return. And if you try and create a portfolio with these things, you might get this blue line, right? And what I mean by that is, for this unit of risk, you get this return. You want to get more return, you might have to take more risk. And these are optimal portfolios within this universe. But adding a high return, high volatility, so high risk, high return asset, can actually stretch out somebody's efficient frontier. And I want to just point out something interesting here, which is a combination of all these assets in some combination, there are optimal combinations, I can show you later, can actually create portfolios which go down in risk. You can see this is going left a bit, right? From here to here, this blue line to red line, and yet high return. So modern portfolio states, and this is proven in real life, that when you add a high return, high vol asset into your universe, right, with low correlations with every other asset in it, you will get much more superior portfolios. And we see this in real life. I'll share an example in real life. You get superior risk-adjusted return from adding crypto into your portfolios. In this case, we're using Bitcoin. We get this analysis from a company called CoinShares, introducing just 4% of crypto allocation, in this case Bitcoin, into a traditional 60-40 portfolio. A 60-40 portfolio is 60% equities, 40% bonds, which is a very traditional portfolio that has worked for investors over the last 30 years, I want to say. Probably hasn't worked that well in the last couple of years. But prior to the last couple of years, the 60-40 portfolio was like the gold standard of diversified portfolios. And what you're seeing with just adding a tiny bit, right? So this is a trick, right? Adding a tiny bit of Bitcoin into a traditional portfolio gets you significant returns with not that much added risk. So volatility is not that much higher from doing that, right? Resulting in tremendous Sharpe ratio. Sharpe ratio is a financial term for a measurement for amount of return for every amount of risk that you take, every unit of risk you take. It's just a financial ratio. Don't worry too much about it. The key to focus on is that you get actually high returns with not that much higher risk, right? And in some cases, you could get lower risk. And I'll explain how that works shortly, right? So it also works across the board. You don't just stick to one allocation, right? So for me, the new way to think about it is not, hey, crypto is only for aggressive investors, right? It's a bit like saying, hey, tech investing is only for aggressive investors, right? Or equities are only for aggressive investors, right? I think most qualified investment analysts, managers, advisors today will really understand that the objective is not to pick asset classes, right? But to balance them or construct a portfolio in a way that allows you to get the maximum amount of return for the level of risk that you're willing to take. So even if you're a conservative portfolio, you typically have only 30% of equity in your portfolio, 70% fixed income bonds. Similar to most pension funds, I think EPF is really not too far away from this kind of allocation. I think they're like 40% equity, 60% non-equity, more conservative, right? There is a place for crypto. So what I mean by that is even a conservative portfolio, right? So 30% equity, 70% bonds, very conservative, not too high volatility. Yeah, volatility is like 8% or so. Adding a couple of percent of crypto, right, to within that portfolio has tremendous portfolio benefits, right? You get high returns. That one sounds intuitive, yes, with a high return thing. But guess what? You actually get lower volatility, right? Which is counterintuitive, right? How can I add crypto to a portfolio and actually have a portfolio with much lower risk? That's counterintuitive. But because of negative correlation, that works, right? And then you scale up the position sizing for aggressive portfolios. So people with 70% equity, 30% bonds, you probably have some allocation of crypto in there, giving tremendous return uplifts for literally no increase in volatility, right? So for me, message with these slides are you get portfolios with superior risk-adjusted returns. It's not about speculating anymore. So the whole mantra or whole motto of Halogen is to get people to stop speculating in crypto, but to start allocating, right? By allocating, you can actually reduce your risk and increase your returns. So in summary, right, crypto as an investment asset, 3 ways to look at it. Number one, you got to have a view, right? Whether it's a good view or bad view, it doesn't, for me, hopefully it's a good view based on what I've shared. But for me, the idea is not to dismiss this as asset class, right? The numbers don't really lie, right? Number two is to be intentional about your position, right? Even if it's, hey, I understand, but I'm underweight because I don't believe it's the right time for me, that kind of stuff. But be intentional about your position. Number two, and I said that earlier, we've got to stop speculating on this asset class, right? There is a lot of speculative value, right? A lot of speculative activity, which is, I don't use the word fine, but it's not unusual, right? Equities have this too, bonds have this too. People speculate on everything, right? Like it's just the way of the world. But for me, as an investor, we've got to stop speculating and start allocating. And how do we do that? Stick true to traditional investment principles. If you use traditional investment principles, you will find that crypto allocated portfolios are superior from a risk-adjusted returns basis, right? And last, I guess the elephant in the room is most people in the last 18 months have been spooked in the world by crypto companies because of hacks or bankruptcies, etc. Number three, the biggest tip here is to use fully licensed intermediaries such as ourselves, right? Cryptos don't really get hacked, right? In general, right? There are some that do, yes, but Bitcoin itself has never been hacked, right? It's the companies which operate in that space that do. And second point here is that as a licensed asset manager, one of the key tenets of our business, we can't do this. We can't do anything else other than this. Is to have segregation of client assets in a trust. That's what unit trust stands for, right? Putting it in a trust, it's separate from the investment manager. I can't run away your money because it's sitting with a trustee, for example. It's a basic tenet of investing that actually a lot of people took for granted and a lot of people forgot in the crypto world. So yeah, quick tips. Please indulge me as I introduce our flagship product, the Halogen Shariah Bitcoin Fund. Right. This is how you can express the view that I spoke about the last kind of 25 minutes or so. Simple, secure Bitcoin investment through a unitized fund structure. We are the first world's first Shariah compliant crypto fund. We are the first crypto unit trust in Malaysia, right? Or crypto wholesale fund in Malaysia. We've got 10,000 minimum investment size with T+1 liquidity. The fund aims to be invested 96 to 99% at all times in the spot physical Bitcoin. Right, the coins are held by a SC registered trustee whom we trust very much. They are trustee, but right, they are also secured by a approved digital asset custodian on a multi-sig basis, right? So segregated from us, multi-sig, so no one person can unilaterally move coins, right? With what we think is a low and friendly management fee. I guess the next natural question, which people ask, is, hey, look, like I understand your theory, your thesis, Han, and I understand you help your clients with portfolio allocation and portfolio management. But what if I want to self-serve and do myself? I know where I can buy from. I can buy from a digital asset exchange, right? Such as Luno locally or overseas. The big ones are available, Binance, etc. Yeah, I mean, you can do that, but I'll share a little bit around why you would versus one versus the other. I'm not saying one is better or not. It's just different considerations. So we are a fund manager, so we're licensed as a fund manager. So we will manage your fund as funds as per any other fund manager. We have slightly different reporting standards, which may be a requirement for some investors, especially institutional ones. Fees are not too different, I guess. We do more on management and custody rather than transactions, right? As I mentioned, your funds are held in trust-controlled wallets, and trust-secured wallets with the custodian, trustee, and us on a multi-sig basis. There is tax certainty, so like very clear. We've got tax advisors. In our case, it's PwC to opine on the tax nature of the fund, capital gains. I know budget 24 just there's a bit of noise on capital gains, but that's specifically for unlisted company shares, so Sendirian Berhad's unit trust so far not under this purview, and we operate under obviously different considerations from an exchange. Now, the best way to describe this slide is if you want to trade, go ahead. There are trading avenues for you. You don't trade a fund, for example. But if you want to buy and hold, you want to express your view in a portfolio, you want to balance your portfolio, you want a portfolio view alongside other assets that we can manage too. That's something that we can do, right? We work very closely with the DEXs, the digital asset exchanges. We trade on them just like any fund manager would trade on using a broker like Rakuten, M+, Kenanga, etc. So we are hoping to build a very strong ecosystem with us and those digital asset exchanges whom we trade on as well, right? But we do it as an institutional player. So that's a little bit on Halogen, my thesis for crypto investing, right? As well as our flagship fund. That's it from me, I guess. So I promised to keep it short. I was a bit over half an hour. Apologies, but I'm going to pass it back to Jia-Ying now.
Okay, thank you so much, Han. Han can be okay. We have a list of questions. Maybe I'll just go through the next slide. Do a very quick one. So maybe Han, can you go to the next slide, please?
The next slide. What's the next slide? Okay, sorry.
Next slide. Okay, so to all of you here, remember Han mentioned about management fees just now. So to all of you here, we actually have a very special deal for you. Means what you're seeing now is you'll actually be getting a rebate of up to 300 ringgit for management fees, meaning we have a few funds. So one is the Halogen Shariah Bitcoin Fund. We also have the Halogen Shariah Ringgit Income Fund. So if you're interested to invest, you'll get your first year with us fee-free, management fee-free. So if you're interested, just scan the QR code on the screen, or if you're on a phone, you can just head to wallet.halogen.my to onboard yourself. If you're unclear, unsure, feel free to reach out to us on our socials for us to assist you. So let us know if you have any questions on this. The TNC, we have also have a list of the full TNC in our website, which I'll be sharing later when Han answers his questions. So yes, I think that's for our presentation for today. So okay, Han, we have a lot of questions. So I think I see there's a list of questions from Anwar. Okay, now maybe let's go through the one in the question Q&A box first. So for Ronnie, which is the Charlie Munger one. So do you want to answer that or?
Yeah, I'll answer it live, and then if you want, you can type it for provenance. Yeah, so I said just now, like, different people value different things. Perhaps when Charlie said this, I respect Charlie a lot as a value investor, to be honest. Perhaps when he said this, he had not done enough deep research on what people use these things for. And I mentioned a couple of things earlier, right? Number one, it's actually a bit hard for a developed markets person to see crypto as anything other than number go up or down, right? Because for them, it doesn't seem that money is a thing, right? But for us, we sit here in Malaysia, we're very familiar what happens to ringgit over time. We know money matters, right? And insurance policies against monetary debasement. When I say that and I explain what that means, everyone gets it. Everyone understands. Everyone goes, yes, I feel that happening to me. How do I insure myself against that? And the minute I explain that, people understand straight away. So hopefully, I mean, for us sitting here in Malaysia, it's very easy to understand that. Versus somebody like Charlie, he sits in a place where he gets the banking system is I suppose more robust. The monetary system, he sits in a currency which is the world's reserve currency. So for me, that's what I'll say about that lah.
Okay.
And he runs an insurance business as well, so like he should really understand what insurance does.
Okay, so I hope that answered your question, Ronnie. Okay, now from Kent. So how do we value cryptocurrency? Is there a suitable valuation framework we can use to evaluate, etc., such as the DCF valuation for stocks? Yeah.
It's a good question. I think with this, it's a bit like saying, how do I value investment? Right? Or how do I value an investment? And I think depending on what kind of investment you're making, there's different value. So I'll give you an example. Assume crypto doesn't exist and you just ask me the question, hey Han, how do I value investments? And if I want to answer your question very completely, I'll say something like this, right? I'll be like, okay, for companies, like if you want to invest in equities or stocks of company or shares in companies, you're going to look at things like short or long-term cash flows. So you mentioned DCF, that's absolutely right? Everybody has either short or long-term cash flows, right? So for example, high growth companies like Facebook, Google, Amazon had long-term cash flows. You don't look at the short term, you look at the long-term cash flow and you value them based on growth. And then when they start delivering cash flows, you can measure the cash flows. That's what happens, right? And for companies like Walmart or for oil companies, then you measure the immediate cash flows, right? Because they're not so much growth, they're more value stocks. So pretty much all companies should be valued cash flow. Then the only question is whether it's short or long term, right? So long term means you don't worry about cash flow first, you worry about growth, right? And then short term means you worry about cash flows now, right? So that's fun. Second thing about value investments is things like when you look at company bonds, right? You look at how do I value bonds? There are many frameworks to value bonds. We have a bond fund manager at Halogen. His name is Fuad. Fantastic bond fund manager, able to value bonds via the cash flows, via a comparison of coupon rates versus current yields, etc., etc. So there's a framework to value bonds. How do you value gold? What is gold price today? 2,000 US pounds. How do you value that? That is a very classic kind of question, right? Most people value it in two ways. One is they value it based on it looks pretty, I like it, so I pay more for it, right? Gold is very pretty, diamonds are pretty. Prettiness is a value. Some people value it based on safety. Like I'm feeling worried in the world right now, so I'll value gold, and I think it will be worth more later. And it's true. So for example, gold, if you take an ounce of gold today, it buys you a nice suit, right? At 2,000 US dollars, right? Nice suit, you can tailor a nice suit, 2,000 US. 100 years ago, you can buy a nice tailored, like kind of tweed jacket right? Tweed suit, exactly the same thing. 1,000 years ago, or 2,000 years ago, you have an ounce of gold, you can buy you a Roman tunic, a very nice Roman tunic. So actually, the value of gold has stayed almost throughout history. So it's sort of value. So for me, now I've given you this very long story, but let me translate it to the crypto world. In the crypto world, there is a crypto version of gold. In this case, it's Bitcoin, right? It just so happens to have additional value, which is can settle fast, like a payment network. In the crypto world, there's also crypto tokens which generate cash flows, right? Because they are representations of projects or companies. And in crypto world, there's also things like bonds, bond-like structures where there's regular promised cash flows. So for me, use the same frameworks that you would do for equities, bonds, gold, commodities as you would do for crypto. Just choose the right ones for the right types of crypto.
Okay, I think I will pick some of the questions. Okay, but I think this is quite interesting one to share. So what's the difference between Shariah and non-Shariah funds? Han, yeah.
Yeah, good question. If you're asking as a Sharia compliant investor, you care about Sharia compliance, then I guess you already know the difference. Which is a Sharia fund does not have elements of riba, so there's no interest. Does not have elements of gara uncertainty. So like we don't use the funds and gamble somewhere. We don't use the funds to do uncertain things. You're very certain what you're getting, which is a Bitcoin. And we use a Islamic bank, for example. So there is no riba in the bank account either, right? It's not interest. Softly low, like the main difference is that we may not be able to invest in coins or digital assets which are deemed not Sharia compliant. So, for example, if there was a gambling coin or like a casino coin or a terrorism coin, a war coin, right? That was used to fund things like that. It might be fine for a conventional investor to invest in, but a Sharia fund cannot do that. So hopefully that gives you a sense.
Okay, I think there are a few questions that's mostly it's mostly the same kind of question. So there's one on, okay, is the fund available to retail investors and what's the expected potential annual return of the fund?
Okay. The Shariah Bitcoin Fund is a wholesale fund, so it's not available to. It's only available to sophisticated and accredited investors, so individuals and institutions. I see as the specific definition that income or not or asset requirement. So income or asset or a knowledge requirements if you're a board director of a listed company, that kind of stuff. Potential annual return of the fund, I mentioned earlier, right? The fund is significantly, almost completely invested in Bitcoin, spot physical Bitcoin. So somewhere between 96 to 99% at any given time. We have some cash for redemption and stuff like that. But the fund will behave very similarly to Bitcoin. So you can express your view in Bitcoin through the fund, right? So if I say, hey, Bitcoin has been traditionally a 40% vol, 40% return asset, that will be what the fund will return.
Okay, then what is we have another question. So what is your long-term price target for Bitcoin since most institutions seem to be investing in it? Then
Good
I think
question.
on to that is, okay, what's your view on the spot Bitcoin ETF approval? So yeah.
Okay, cool. What is my long-term price target? It depends on what you mean by long-term. If in your world long-term is 2 years, then the target will be quite a little bit lower than if your long-term was 10 years. I'd say in the immediate term, so in the next 6-12 months, that's not really long-term. That's kind of immediate to medium term. There are a lot of tailwinds coming in for crypto as a whole, but Bitcoin specifically, which is number one, the halving. It's a well-known event that happens for Bitcoin, which reduces the supply. So if you imagine a situation where you've got a gold miner who's mining gold, and suddenly we tell him, hey, like whatever gold you're mining, right? Like you can only mine half of it. I don't care how hard you work or how deep you go, it's only half available suddenly, right? And if this happens worldwide across all miners, I can promise you that the price of gold will go crazy, right? Suddenly gold production has dropped in half. And this is exactly what's going to happen to Bitcoin sometime in April next year. So that's a bit of tailwind. Usually, and I'm not saying it will happen, but usually as a result of this, and it's not just tomorrow it happens, kind of thing. Going up to it and after it, economic participants have to adjust to that halving, right? And that typically means rising prices of Bitcoin because there's just less supply. So that's a tailwind pushing it up. The second tailwind is what you kind of alluded to, anonymous attendee, which is institutions such as ourselves and our clients are now able to access Bitcoin in a institutional friendly way, meaning for us, structured fund, a wholesale fund, which is structured in a way which is very familiar to investors, right? Everybody knows what a unit trust is, right? It just so happens that inside the unit trust are Bitcoins, right? So for me, that gives a lot of confidence to institutions. Say, hey, look, does that mean I have MFRS, IFRS compliant reporting? Yes. Does that mean I have tax compliance? Yes. Does that mean I have Shariah compliance in our case? Yes. And these are points which bring a lot of institutions in. And for retail investors, I guess, in this room, or human investors, individual investors in this room, I'd say this is one of the first asset classes where you can go before an institution. Most asset classes get pushed down to us after all the institutions have made all their money already, whether it's VC or PE or real estate infrastructure funds, that kind of stuff. We are usually last in the chain. This is one of the first asset classes where you can be first in the chain, the first mover, right? So, most of the tech companies, when they IPO, all the VCs made their money already. All the institutions made their money. This is one of the first situations where you come in before an institution, like BlackRock. So just to give you a sense of those things, why I'm bullish.
Okay, I think let's take up two more. So one is on, okay, who will have custody of my digital assets and how is this custody arrangement safeguarded by Anwar? Yeah.
Okay. First, good question. Let me just break that down into two pieces. The first piece is legal custody. This is a very important point, right? Legally, who owns the coins? Like if something goes wrong, like when you put a coin with someone, like you have to understand first the legal frameworks. We live in the real world, right? We don't just live in digital world, right? Legal things can help you, right, in the real world, right? Who legally owns your coins once you pass it to somebody? With most participants, and this led up to the issues of 2022, right? I don't want to talk about FTX and all these guys, but like a lot of the issues have been driven by legal ownership, which is actually once you pass your coins to FTX owns your coins, they just owe you some money, right? But in a mutual fund or in a unit trust in Malaysia, in our case, legally we're obliged to create a fund which is run by the trustee or legally registered to trustee, and the trustee's job is to make sure that you legally own those things, right? I don't own it. Like the Halogen does not own your assets, right? We just manage. We're a manager rather than you give it to a company and now the company owns it and they owe you some money. No, that's not ownership. That's something else. So that's the first thing to note, which is legal custody, right? Who legally owns? It's the trustee on your behalf, right? And trustees have been doing this for many years. The trustee we've chosen, Universal, has been around for like more than 50 years. They do billions of assets of all kinds for other investors. There's no incentive for them to run away with your money. So that's the first point. Second point is the actual custody, the technical custody of your assets. We have a multi-signatory, a multi-sig sign-off on the keys, right? So I don't have the keys, by the way, in case you're wondering. And neither does the trustee, right? So the custodian, right, custodies the keys, and it's a multi-sig with us and the trustee. So no one person can unilaterally move your funds, right? So that hopefully gives people a lot of confidence. My belief is multi-institutional signatory custody is the way forward, right? Because what you need is trusted institutions which have no reason to default each other or you, right? And if anyone gets compromised, your funds are not compromised because only one out of the 3 or 4 or 5 of the chain is compromised. In our case, it's 3.
Okay, I think we have one more question. I think it's quite relevant. So from Kamaru, so if a company onboard this crypto unit trust, how does it reflect in our company account? Is it considered as asset for company or what?
Right. This is a very important point actually. So this, I guess, is one of the advantages of using a unit trust structure. Unit trust in Malaysia is considered financial assets. So under a company's balance sheet, and we're getting both PwC and EY to agree on this, obviously. it'll be recorded under your balance sheet as a financial asset rather than a art piece or intangible asset. So I think that's the key differential point, which is a unit trust. It has price. It can be traded by you, i.e., it can be bought and sold. It has audited reports with IFRS, or in our case, Malaysia MFRS compliant audits, which means that it can be valued as a financial asset. So it will be on your balance sheet as your asset.
Okay, and the 1% fee is fiat or crypto?
Our share class is in ringgit, so it will be in ringgit.
So, okay, one last question to wrap up by Jin. Okay, what are your perspectives regarding employing the DCA strategy within the cryptocurrency market, particularly given the considerable volatility characteristic of this market? I think that's our last question for this session.
Good question. I love this question. I think the answer to that is look at it in the context of your portfolio. If you're DCing into an overall portfolio, then naturally you would size your position, right? So again, my point here is not to speculate on this asset class, it's to allocate within your portfolio this asset class. So if you're DCing into your portfolio anyway, you can use that as an opportunity. Dollar cost averaging, yes. If you're dollar cost averaging, meaning you're just investing regularly into your portfolio, either for retirement or for kids' education or whatever, the key is to first get the right amount of crypto in, right? And I gave you some clues of what the right amount could be based on your risk return targets. And then when you dollar cost average into your overall portfolio, you can use that as an opportunity to rebalance your portfolio. So for example, if in any given month you suddenly find your equity portion has gone down significantly, right? You can when you DCA, right? When you dollar cost average in, you will generally end up buying more of it because you need to rebalance it back to your target allocation. Likewise, when crypto jumps up 2x in the last 3 months like it has, right? What do? You are now over invested in crypto, which means you need to rebalance, sell a bit, and rebalance to bonds and stocks and commodities or whatever. And that actually makes you automatically not just a dollar cost averaging person, right? It makes you a auto person which buys low and sells high, right? So because why? When crypto jumps, you're selling high to rebalance your portfolio. And when crypto drops, you're actually rebuying back lower to rebalance your portfolio, not to speculate, but just because you want to get your portfolio to the right target allocation.
Okay, thank you so much, Han. Thank you for answering everything. So we didn't get to answer most of them. I mean, there are still a lot of questions that we didn't answer, but you can please do message us, then we can get back to you one-on-one on that. So thank you everyone for joining. I think this marks the end of our sharing today. So if there's anything, do check us out on our socials. Maybe Han, you can go to the next slide for where our social handles is at. So yes, to everyone here, thank you so much for joining. Hope you have learned a thing or two, and don't hesitate to get in touch with us as well. So we are very social, and you can also get in touch with us through our website if you have any questions about the fund. And yes, I think that's all that we have for tonight. Thank you so much for joining us today, and this won't be our last, so do anticipate more webinars from us by following our socials. So I think that's all. Thank you everyone, and have a good night. We'll see you again soon. Bye. Okay, thank you. Thank you.
Thanks everyone. Good night.
Bye.
Everyone. Hope to see you at the next one.